Hello everybody, I'm Aaron Norris. It is November 18th and welcome to the Real Estate Headline Roundup in 2. First up with the national numbers. According to the National Association of Home Builders, affordability has risen for the 10th consecutive quarter. 72.9% of new and existing homes were affordable to families making the median U.S. income of $64,200. The Mortgage Bankers Association says banks have increased foreclosure activity by 1%. It's up for the first time in about a year. However, new delinquencies are down almost 0.5%. Hope Now, the voluntary alliance between servicers and investors, announced their 5 millionth loan mod since 2007. Of the mods, 80% are performing after 6 months. Let's get to some California numbers. DataQuick released numbers this week showing high-end homes in Southern California seeing price decline sharply due to changes in conforming loan limits. Could it be seasonality, conforming loan limit changes? Most of us have been watching the price declines in high-end inventory for a while now. Regardless, DQ reports SoCal price declines of 3.6% from September. Home sales of $500K or more made up 17% of the market. Southern California rents are on the rise once again, according to the Bureau of Labor Statistics. That's the 14th consecutive month it's increased. It currently stands at 1.1% for this year. Speaking of numbers, the National Association of Realtors admits to overstating home sales numbers in 2012. NAR was originally called out by Calculated Risk back in January, and CoreLogic has come out saying they think the numbers might be off as much as 15 to 20%. No changes are expected for month's supply inventory numbers or median price. Lawrence Yun, the chief economist of NAR, came out last week with its 2012 projection. Mr. Yun thinks pent-up demand combined with the best affordability rates seen since 1970 should see real estate fare slightly better in 2012. So the GSEs rolled out their new guidelines for the HARP program this week. So in the new program, negative equity limits are raised and owners have to be current at least for the past 6 months. If your payment is set to increase more than 20%, you will most likely have to requalify for the loan. Yep, they're going to look at your credit score, income, assets, all that kind of good stuff. And the loan has to be sold to Fannie or Freddie prior to April of 2009. The bottom line, there has to be a benefit to the borrower, whether it's a stable product, so something like moving from an ARM product to something more like a 30-year fixed, or the payments have to go down for the borrower. One of the most significant changes in the program is that previous lenders will not be held liable for representation and warranties associated with the original loan and the new loan. For you loan officers out there, I've included the link to Fannie and Freddie's guidelines on the blog. Funny, however, AIG has come out saying they won't sign up for the program just yet, as AIG believes this is a backdoor escape for lenders who falsified things like income on the original loan. It will be interesting to see if this latest development changes anything before the program really even gets started. A new report shows that FHA Reserves are now below the legal limit. Actually, it's been below the legal limit for 3 years. An audit believes there's a 50-50 chance the agency will need another infusion of taxpayer money shortly. FH Capital Reserves should be at 2% of all outstanding mortgages. It currently stands at 0.24%. Of course, there's a ton more news on our blog at thenorrisgroup.com/blog. Up on the radio show this week, I Survived continues airing for the next 2 weeks, actually, into Thanksgiving weekend. If you haven't watched Cutting Edge Financial Tactics Brunch for I Survived Real Estate, those videos are also available online on YouTube, or check it out on our website. December 4th, we're going to be at the Northern San Diego Real Estate Investors Association's Let's Get Personal Holiday Party. Tickets are selling out quickly, and it's a really great lineup of some really good friends. December 13th, we're going to be releasing a new talk entitled Real Estate Rewind. That's going to be at SDCIA, December 13th in San Diego. Lots of San Diego going on in early December. For more information on hard money loans, check out thenorrisgroup.com. If you're interested in earning a 9% passive and secured return, check out tngtrustdeeds.com. Have a fantastic weekend, and we'll see you next week.